Welcome to the What to Watch video update. This is a video that I do over the weekend. It's the last video that I do each week where I pick out those charts that really seem to be speaking right now. If you've watched any of these videos before, there's going to be charts that I show in pretty much every video because I'm watching those things all the time. But I come up with a list of positive things, a list of negative things, and then areas that are really not positive or negative, but we're just watching. And then I put them together in this video. This is being prepared for Tuesday, February 18th. The first area that we'll look at, it's kind of a long list. We're looking pretty positive right now. So we'll go through the things that are suggesting that the market is still looking pretty good. The first thing is the intraday chart. Now, I'm not a day trader, but I do follow a 10-minute intraday chart just to get an idea. What's the general ebb and flow of prices during the day? And when we started the week, we were kind of flat. There was some anticipation ahead of CPI coming out on Wednesday, and it came out hot, freaked the market out, sent interest rates going up, and it set the futures prices going down, and so we gapped lower. But if you notice, we set the low right at the open in Wednesday's session, and we clawed our way back. Then PPI came out on Thursday. It was also hotter than expected, but that didn't seem to matter. They were able to justify things going higher, so we kind of picked up where we left off on Wednesday and then took prices higher. Then we had retail sales come out on Friday, weaker than expected, but the market didn't really listen to that all that much, didn't really react to it. We had a pretty much flat day. But if you look at the intraday action from Wednesday, especially through Thursday, and you could even say carrying over into Friday, it's looking pretty positive. Now we had an up week, but this just shows you the tug of war that goes back and forth between buyers and sellers during the day. If there are more buyers than sellers, we go up. If there are more sellers than buyers, we go down. On Friday, we were pretty much even. So we didn't really send the market in one direction or the other for the most part. Also, we're looking positive here, but we're not trending right now. We look at all the different time frames. This is a short-term chart. And I look at a thing called the ADX, the average directional movement, and it helps to determine the strength of the trend. That's the black line that you see here. And you can see it's going down. It's trying to level out, but it's still below its moving average. That means that we're in a weakening trend that's getting even weaker. Now, if this can turn up and go above the moving average, that would suggest maybe a trend is developing. If we get back above 20, the blue line, that means that we're now in a trend and it's getting stronger if we're above the moving average. So that gives us an idea. What is the condition of this trend? Now, we can also look at the green line and the red line. Whichever line is on top, that's what we default to. The green line is above the red line. You can see it's been really choppy. There has not been a lot of conviction lately. That's why we're getting really low readings with the ADX. But taken together, this is still positive, but we're not trending right now. And we're seeing pretty much that same thing in the intermediate term. We're still below the moving average, still declining, but the green line is on top. Then we look at a weekly chart, also below the moving average, below 20, declining, but the green line is on top. So we are positive that way. It's just that we're not trending right now. We find ourselves to be in a rather choppy environment. So that's the negative part, that we're not trending. The positive part is that the green line is on top on all these charts that we just looked at. And we're looking good internally. There's a 10-minute intraday chart of growth versus value for the S&P. We bottomed on about January 28th, and we've been going up ever since. It's not a straight up line, but the trend is that we've been going up. In a positive environment, we want growth to outperform value. Here's another look at growth versus value. The blue line is above the red line. Blue is growth, red is value. When the green line is above the red line, that means growth is outperforming for the large caps. Then we break this down a little bit. We look at small cap growth of value, kind of going sideways right now. The index is not really doing much of anything. The small caps are not very strong these days, but the growth to value ratio is holding up fairly well. Mid caps, probably the weakest index that we're looking at right now, just kind of drifting lower here, but the growth to value ratio is still looking pretty good. So there is some buying coming in and buying growth over value. We're just not seeing it really reflected in the index. Here's S&P growth to value. Has come down over the last few sessions, but overall it's in an uptrend. So this is still looking positive here and has been now for the last number of months. We look at a growth versus a value ETF and then do a ratio. Not really strong right now, but still at the high end of the rainbow. And then we do some growth to value ratios. The QQQs to S&P, when this is going up, that means the triple Qs or the NASDAQ 100 is outperforming the S&P. And that's what's happening right now. And that's positive for the market because the stocks that are in the NASDAQ 100 are also in the S&P 500. So this is positive. Discretionary to S&P. This is getting a little bit better, but it's really been trailing off. A lot of this can be attributed to weakness in Tesla. It's in the discretionary sector. Now, it had been a really strong performing part of the market. Then it went sideways. Now it's been seeing some weakness. It would help things look better if this ratio would go back up and get above the moving average and kind of going sideways to slightly higher when we compare large cap growth to large cap value. So with the large caps coming back up to the moving average, but the moving average is still declining. We're declining, but above the moving average with the mid caps, and the moving average is going up, and we're pretty much flat, slightly under the moving average with the small caps. Large cap growth. This is looking pretty good. Not setting an all-time high, but still above these moving averages. So it's in a solid uptrend, and that's positive for the market. Looking at the advanced decline line based on price and volume, kind of chopping around based on price, we're seeing a little bit more strength here based on volume. Now, the reason this chart is positive is because we're above these advancing moving averages. And you can also pick out that sometimes when volume is leading, where it's going up, where price is going sideways, that can often be positive for a price. We're just not seeing it really reflected in price at this time. Then we look at a cumulative advanced decline line for the S&P, kind of chopping around based on price, but starting to break out here based on volume. That could be leading and giving us some ideas that things are positive for the S&P. The advanced decline line studies, not super positive right now, but we're above the moving average with the NYSE, just the common stock. The S&P, the mid caps, were right at the moving average with the small caps. It would be more beneficial if we could stay above these moving average lines and then see the lines start to go back up. So this is looking positive, but it could look better than what it's looking like right now. And we'll look at the new highs minus the new lows. Now, there's a positive and a negative side here. We're seeing a lot more green than red. That's positive. A lot more new highs, that's green, than we are new lows, which is red. The reason this is going down is not so much of an expansion of new lows, even though there has been some, as we've been under pressure over the last few sessions in a couple of weeks. It's more of a contraction of the new highs. Now, if we could turn back up with the 5-day, we're already starting to go back up ever so slightly with the 10-day. That would turn this back more positive. But when you see more green than red, that's why I call this positive when taken all together. The advanced decline ratio, short term based on 19 periods, intermediate term based on 39 periods, both lines are above zero. So that's positive there. This is smart money indicator number one. This is actually quite positive, even though it was pretty much flat in Friday's session. We're above an advancing moving average. And this is the contradiction that we've been seeing. We're not trending. We're seeing some weakness internally with the S&P. But the smart money indicators have been coming in and buying, and we want to follow what the smart money is doing. This is the group of institutions and pensions and those folks that really control what the market does. We want to be doing the same thing that they're doing, and they're buying right now for the most part. But on the one hand, we're getting a little far away from the moving average here. Now, this indicator down at the bottom, this is supposed to measure how far we are away, and you can clearly see this indicator is wrong. This is supposed to measure where the indicator is compared to the moving average. I use a modified MACD, and sometimes it gives us a pretty good reading here. Right now, it's just not. So just look at the indicator and the moving average itself. But this is positive, but maybe a little too positive. Chicken money flow, also quite positive now, but maybe a little too positive. When we've had really high readings like this before, Sometimes that means that we topped out with this indicator. Now, it doesn't necessarily mean a reversal. When we topped out last summer with a very high reading, we just went sideways after that. Does that mean we're going to continue with some more sideways action? There are some really good strategies that you can implement when we go into a sideways market. So it doesn't mean that you just have to sit back and do nothing for the time being, because most folks are trend based and they want to buy low and sell high. The way I teach things is we can do things when the market's going up, we can do things when the market's going down, and we can do things when the market's going sideways, which is what it's been doing for the last couple of weeks. So even though this is positive, we want to be a little bit aware that it's giving us kind of an extreme reading. It could still go higher than this. I don't really have any boundaries that are attached to this indicator. So as long as it's still going up, that's positive. If we start to drop and the red line comes down, then that would turn it negative. Chaikin Oscillator, our third smart money indicator. This is actually turning a little bit negative. It's starting to drop below its moving average after giving us a really extreme reading. So this is positive, but is it giving us an early warning that maybe we're starting to see some weakness coming into the market? Another primary indicator that I look at is called the vortex. The green line's going up, that's positive, and the red line's going down. So this chart is positive here. And the VIX has really been behaving pretty well. We're starting to drop. We're coming down with the line chart, which is the closing value. We're coming down with the bar chart, and we're below the 20 level. And so that's more positive for the market. We also see that the momentum, even though it's not really going down with any conviction, the MACD is saying that the downtrend for the VIX, or the trend of the VIX, is down right now. And that's more positive. When the VIX is going down, that means stocks are going up. Then the McClellan oscillator, just right on the line here. It's really in between. And I could have just as easily put this on the negative side of things. If this continues to drop down, this would actually drop to more negative. And when we're going sideways right now with the summation index based on price, but we're going up based on volume. This is another indicator that's suggesting maybe volume is leading price. That's why I put it on the positive side. But this chart is not full-blown positive. We're actually somewhat negative on the top part. Now we are above zero with the NYSE McClellan oscillator. So I have two McClellan oscillators that I follow. One for the S&P and then this one for the NYSE. This is a broader market measure. And since we're above zero here, we're still going up, even though we've been chopping around with the summation index based on price. And we're still kind of chopping around, but showing a little bit of a tick up here based on volume. Then this is sometimes a really good indicator and sometimes it's useless. So it's called the Swenlin trading oscillator. We pay attention to it all the time. It's not what I consider to be a primary indicator because it does give some false signals, but it also gives some very good signals at other times. We're actually crossing back above zero based on price, and we're already above zero based on volume. This is another indicator showing that volume right now is stronger than price, and that can be taken as positive. This past week, we switched back over to positive with the parabolic SAR, another primary indicator that I use. When the dots are on top, that's negative. Now the dots are on bottom. So that's positive. And just to confirm that, this is a weekly chart of the parabolic SAR. And we've had the last number of weeks with the dots underneath. That's also longer term positive. Then we look at the condition of the short-term trend. And I use a double and triple exponential moving average. They move really fast. The general idea here is that the lines are going up, and right now we're above both of these lines. We've been really flattening out, not showing an awful lot of conviction as we've been trendless lately, but as long as these lines continue to go up, this should be taken as positive. This is a 20-period simple and exponential moving average. We're above both, and that's positive. That's why the short-term trend is positive. Then we look at the condition of the intermediate term trend based on 50 periods. These lines are also going up, and for right now, we're above both lines. And here's the simple and exponential moving average. We're above both those lines as well, so that's positive. Here's all the different moving averages that I plot. 20, 50, 100, and 200s. We're above all of them right now, and all the lines are continuing to go up. So that means short, intermediate, and long term, we are positive. Long-term chart, weekly chart, going back to the 1987 crash, we're still well above this trend line. So that's longer term positive. Then this is another look at, it's called an Ichimoku cloud, which are really a set of moving averages that are placed on current price and then shifted forward on the chart. Well, when we're coming down, this will often provide an area of support. When we're going down and we bounce back up, it'll often provide an area of resistance. Well, this is pretty positive. First of all, we try to find the green line, which is right here, which is for the most part still going up, ticked down a little bit on Friday. That's positive. And then we look for, is the blue line above the red line? Well, here's the blue line and it's going up, and here's the red line. That's positive. And are we above the cloud itself? Yes, we are. So all of the conditions on this chart suggest that we are positive. The NASDAQ doing really well, not at an all-time high yet, kind of going back. You could say, are we going to hit overhead resistance right around where we're at right now? But we're above the 50-day moving average and we're going up. So we are still positive for the time being. Also coming really close to an all-time high with the NASDAQ 100. We might be hitting some overhead resistance at this R1 pivot point, but we're also above the 50-day moving average and the longer-term trend is up. The momentum of the NASDAQ 100, not really strong, but it is up right now. And here's a weekly chart where we did set not an all-time high, but a closing high for the NASDAQ 100 on a weekly basis here. Now, you can take a positive stance or a negative stance with this chart. This is an equal weight version of the S&P. Now, the S&P itself is a weighted index, so that means the bigger stocks have more influence on how it's going up or down. Well, instead of using the weighted version, we have an equal weight version where all 503 stocks that are in the S&P, they're all treated the same. This is not setting an all-time high, and it's kind of drifting a little bit lower. That's negative. Now, look at the bottom. Here's the QQQ equal weight. This is setting a new all-time high. That's positive. Okay, so you could say, all right, we see the QQQs, which is really heavy with tech in its calculation. That's always a good thing, but the S&P is not there yet. So we treat that as a negative divergence until we do see an all-time high with the equal weight version of the S&P. So it depends on your perspective. You could look at this chart and go, ooh, yeah, this looks good. You could look at this chart and go, uh-oh, this chart looks not so good, at least right now. The Wilshire 5000, a broad market measure, looking pretty solid above its 50-day moving average. Total U.S. stock ETF, 2,651 stocks the last time I checked, above the 50-day moving average in an uptrend. That's positive. Financial sector, looking pretty positive right now. That's a good thing when the financial sector is doing well. The FANG index, these are the really big mega cap stocks, Facebook, Apple, Amazon, Netflix, Google, Nvidia, and probably some other ones. It set an all-time high on Friday. And then we look at a ratio between stocks and bonds. And when we're getting a high reading like we are now, the market is anticipating a soft landing, meaning that the market thinks we're not going to go into a recession. And that's pretty much what we've been seeing. So we'll just go with that. Now, this could change at any time, but we can just go with what we see right now. Then we look at a broad market measure and compare it with short-term bonds. Stocks are outperforming. Another broad market measure looking at 3 to 7 year bonds. Stocks are outperforming. The tech sector, 3 to 7 year bonds, could be stronger than it is right now, but it's up at the top of the rainbow and trying to go out to the upside. The QQQs, the 3 to 7 year bonds, looking pretty good here. That's far from negative. And then we look at a ratio between the QQQs, the NASDAQ 100, and IWM, which are small caps. Going up here, we're well above this blue line. A ratio between the NASDAQ 100, which is growth, and the Dow, which is considered to be value, above this red line. That's quite positive for growth. A weekly chart of the NASDAQ 100, still well above this long-term trend line. And depending on what kind of a day we have, if interest rates go down, that's positive. If they go up, that's negative. We dropped in Friday's session below 4.5%. That's kind of the area that I've been watching lately. Now, there's nothing magical about 4.5%. You could go back 20 years and the magical level might be 7%. Or you go back a few years ago, it might be 2%. It's just what the market has fixated on right now. It's like stocks can go up and interest rates can go up at the same time. But when interest rates start to go up too high, eventually the stock market says, okay, based on the current environment, interest rates are too high. I'm going to start selling instead of buying. And at this time, it's right around that 4.5% level. And we dropped below that on Friday because of the weak retail sales report that came out. And so I'm treating that as positive. Also, from time to time, I've been watching this 4.5% level, which on this chart is 45. And we had been above it. We were below it earlier in the week. Then we shot above it. This is when CPI came out. And this is when PPI came out. And then we started to come down. Actually, this is CPI, and then this is PPI. And then we dropped below 4.5% in Friday's session. And now stocks didn't take off and go to the moon, but they didn't fall apart either. So we'll be watching this level to see if rates stay under that 4.5% level. Then looking at the broad market with the Amex, NASDAQ, and NYSE, we look at a 5-period moving average of the highs minus the lows. We're above zero and going up. So that means there's internal strength across the broader market. Now we look at the negative side of things. We're still below 50 with sentiment. As a general rule, when we're above 50, that's positive. When we're below 50, that's negative. We were trying to improve here, but we just don't see an awful lot of confidence right now in the market, which could actually work to the market's advantage. And we're turning over with our momentum indicators here. I have two short-term oscillators. The slope, that's going down. That's negative. We're actually trying to go back up with the TSI. So we're seeing a bit of a contradiction here. Then I have three intermediate term oscillators, and they're trying to turn back up after the strong day we had on Thursday and the flat day we had on Friday. And then I have two long-term oscillators down at the bottoms. The Trix and the KST, we're rolling over, but we haven't crossed over negative here. So we're getting a bit of a mixed picture this way. But it's not showing a lot of strength right now. That's why it's on the negative side. And the Copic curve, another momentum oscillator. It's trying to turn up, but it's still negative. Then this is the bullish percent index. This measures the buy or sell signals inside of the S&P based on point and figure charts. And we ticked up a little bit on Friday, but we're still below a moving average that I have plotted on here. And that's when we're negative. Now, we're technically still positive because we're above 50, but the context is that we're going down and we haven't improved a lot with this chart, at least yet. We need to have this go up, get above the moving average, and stay above 50 for this to be more full-blown positive. Because it's declining right now is why it's negative. And we're seeing a little bit of a drop off here with the NYSE bullish percent index. That's a broad market measure. And also a decline with the NASDAQ 100 bullish percent index. After it was giving us an extreme reading, it's been coming down lately. So it's not picking up a lot of strength in the market right now. Then we look at those stocks inside the S&P above their 20-period moving averages. We dropped below 50 with the 20-period moving average. Now, these other ones are positive and they improved on Thursday and Friday. But look at the index right here where it's going up and we're really near an all-time high. But we're seeing a negative divergence here with the 50-period moving average study. If we were a lot stronger than we are right now, we would see these readings a lot higher than what we're seeing right now. We're seeing that same thing here with the 100-period moving average study. Going up with the index, showing a negative divergence longer term with this study. And that same thing, the 200-period moving average study. It's still positive. We're well above 50, but we're not really showing a lot of strength currently. Then we've been watching this and it's been negative now for some time. Home construction, and then we do a ratio with 3 to 7 year bonds. This continues to be quite weak, where it spent most of 2024 looking strong. Then this really is positive, but I'm treating it as negative because this trend channel going back to 2009 is likely providing overhead resistance and why we're having a really difficult time trending right now. Can we break through and get above this trend channel? That would turn things more positive. We could also get close to this, which is where we're at right now, and then start to come down from this level. We look at a ratio between semiconductors and the Dow, showing a little bit of improvement, but still trailing off for the most part. So that's more negative. Then those areas that I'm watching, we want to keep an eye on weekly jobless claims, which have been declining now. That shows economic strength. And we're also flattening out to starting to decline here with the continuing claims. That also shows strength. And then just to give it some context, I also plot the unemployment rate on here, which came in at 4% last time, just to kind of see all these things together. And this, I don't know whether to treat this as positive or negative. This is a variation of the VIX, where the VIX uses at the money options to be calculated. The skew index uses out of the money options to be calculated. When we get a high reading up in this red area, the market is still expecting some kind of a big move, but we've been up in this area now for a long time. And that big move has not happened, at least yet. But we'll just be watching this. That's why I'm not treating it as positive or negative right now. There are times when I look at this and go, okay, maybe it's more positive. Other times I look at it, we have a good solid up day and we're still in this red area. So I'm not quite sure what the context of this is, but we're just keeping an eye on it. And then we look at the relationship between cash and 3 to 7 year bonds. When this is going up, that means the market's more concerned about interest rates going up and inflation picking up. And going back to about October, that's when this really started to go back up. And that's causing some concern to the market. We're seeing a similar thing here with TIPS, which are Treasury inflation protected securities. When the market is worried about inflation and interest rates, they get into TIPS because TIPS readjust interest rates. They allow for inflation. And that's what folks really like to get into when they're worried about inflation and interest rates. And that's what we're seeing right now. The TIPS are outperforming the 3 to 7 year bonds. When this goes down, that means the market thinks, okay, for 3 to 7 year bonds, we've topped out with interest rates and now they're going to go down. So we prefer the 3 to 7 year bond ETF because that's going to start outperforming the TIPS. But that's not what we're seeing right now. Right at the beginning of 2025, we saw this ratio really going up. And we're seeing pretty much that same thing here with TIPS with 7 to 10 year bonds going further out. This is going up, meaning the TIPS are outperforming. Now it came down on Friday, but we're seeing a trend of this really going up. So this is just something that we're watching. We're also keeping an eye on international interest rates. This is the 10-year yield across the US, the UK, Japan, and Germany. What we're watching right now is in Japan, the red line. Last summer, the end of the day or end of the world day that we had, that's when Japanese rates crossed above 1%. Well, they're still going up right now. Now, it doesn't seem to have that much of an impact, and maybe it won't. But we were watching this last summer, and it did have an impact. Now, there's a lot of crazy things going on right now, and maybe the market's just a little bit distracted. So if this red line keeps going up, is that going to matter at some point? We don't know. We just want to be aware of this. And we're just keeping an eye on oil. A lot of geopolitical things going on right now, but oil is still sitting near the lower end of the 70 range. If this really spikes up, that could be because of geopolitical unrest. So we just watch oil for that reason. And we want to keep an eye on the dollar. It's still in an uptrend, but it has been pulling back. Now, if this can continue to decline, that will probably help stocks. Stocks like a weaker dollar. It looks better on a conversion rate. It looks better on their books, and it helps out the import-export relationships. So it is pulling back right now. So we'll just have to see if this continues to fall, or if it turns and goes up, that may put some pressure on stocks. So thank you. I hope you found this helpful. Have a great weekend, and I will talk to you in the next video.